Hey everyone, welcome to the March Buyer Workshop Series. I am Nina Gervasi, your host for the day, and you know that because you're here. And we are really going to dive deep into the questions that people have sent me that they really want to know about. And always top of mind is, how is the market really doing right now? And I'm going to answer this the same way I've been answering it in the past. It is very location dependent. And I'm going to say one more thing because this actually applies to the sellers, but it depends on how that house was priced. We all know that there are some sellers out there who are still trying really hard to price their houses higher than they should be because they're remembering what it was like back in post-COVID where they could list it at 20, 30, 40,000 higher than what they bought it at just a couple years prior. So, what we are looking for on the buyer side when we are looking for the deal, which is why people are asking me, how is the market doing? Can I still get a deal? Is there still an opportunity? We are going to still be looking at those houses that have been sitting a little bit longer on the market in order to figure out, okay, where was this purchased at? How long has it been since the seller purchased the house? What are they trying to do? Or have they already overpriced it based on what they want? Can we try and negotiate down from there? What is the neighborhood doing? What is the neighborhood's history? How have they been selling in the past? How quickly? How many houses have come on the market? That sort of thing. All of that will play into you as the buyer getting the deal when you're looking for a home. So, the deal is still either going to be houses that have been sitting a little bit longer or looking at new construction, which at the moment hasn't changed in terms of incentives. But I'm letting you know right now that because things are heating up, those incentives are also going to dry up. The incentives are just that. They're trying to lure you in as the buyer in order to go forward with their neighborhood, that house, whatever the case may be. And again, they're mostly likely going to be on the houses that are ready to close within the next month or two. So, new construction incentives are on the homes that are getting ready to be handed over the keys in the next 30 to 60 days. Now, if we are talking about homes, and I'm just going to use my neighborhood as an example here in Cary that are going on the market, we are pretty much seeing some of these houses go under contract in 2 to 3 days. I'm not kidding you that something completely shifted and we're seeing the multiple offers come up again, the higher due diligence fees, all of this stuff play into how the buyers are approaching. I think there's just a tiny bit in specific areas where that panic mindset has set like, oh my gosh, I don't want to miss it. Oh my gosh, like, are you going to go till Sunday? Here's what I want you to hear as a buyer. I don't want you thinking that you can go till Sunday to make a decision to either see the house or make an offer on the house. If you like something and it hit the market on a Wednesday, a Thursday, a Friday, whatever the case may be, get your butt out there and go see it very quickly because it's not waiting for you. Those other buyers are not waiting for you to make your move. The ones who are serious are making their move quickly and they're making it aggressively. Again, location specific. I can tell you that in a better part of Cary, this is happening. Apex has been a little hit or miss, and that's because Apex is contending with so much new construction that they're competing with. So these buyers are looking at, hey, why would I pay $560,000 for a house that is, I don't know, 10 years old or whatever the case may be, when I can go buy new construction and there's all of these incentives. Now, granted, some of the new construction that buyers are going for, and you may be one of them right now, is passing up a single family home for a townhome because of the incentives. I am not kidding you. It is happening time and time again with my buyers who have come into town from out of state and other places where they start looking at, single family homes. And they're like, well, wait a minute. I think I might only stay in this about 5 years. Biggest recommendation is if you are buying a house right now, I want you to think of staying in the house a minimum of 5 years. to recoup what you have put into the house and everything else, because the market is not doing what it did post COVID. You're hearing me, right? You buy today, stay in it at minimum of 5 years. I'm not kidding you about this. All right. So they're passing up single family homes to get to that new construction townhome. They're thinking 5 years, I can do 5 years in a townhome. And I got to tell you guys, those 3-story townhomes, although everybody at first is like, oh, I don't want to do all the steps. First of all, those steps are good for your health. Second of all, when you get to that second floor and you can see how spacious that it actually is, you may change your mind about those 3-story townhouses. The steps are good for you. We're all trying to count our steps, and doing different levels, that's even better for your health. So don't be knocking those 3-story townhouses, buyers. All right. So, buyers, I'm going to ask you, if you were out there on the market right now and now you're saying, oh, well, now I don't want to compete. Well, what did you think was going to happen when you were sitting on the fence back in the fall or early winter or winter? Did you think it wasn't going to get competitive? And everybody keeps waiting for the rates to drop. Guys, oh God, like seriously, I am so tired of hearing this rate conversation. Can we just agree that it's not going back down to where it was, that you're either going to buy at this rate and refinance later, or if it's going to stop you this 5 to 6% rate from buying, you're just not it. You're not in the market. You're not a motivated buyer at this moment. So it's really got to stop in terms of that conversation, because if you're constantly going to be waiting for that perfect rate, you're missing opportunities. And as we have seen, as these rates have dropped, that more buyers are coming out and they are active. They're not waiting. They know. I even had some past clients of our team reach out because now they want to refinance into the 5s and 6s. Are you hearing this? Into the 5s, really, because they were in the 7s when they bought. You're not wanting to buy in the 5s, and yet people are willing to refinance into the 5s. And maybe even buy that rate down a little bit more into the 4s. Okay, so buyers, here's the other thing we want to talk about right now in terms of what you can be doing for your rate and understanding what some of these incentives are that are being offered by builders, maybe by sellers that are really trying to entice you into their home. They're going to help buy down the rate. So many people are going for 30-year conventional mortgages, okay? So pretty much a straightforward mortgage in that situation. You also have, let's say, a 2-1 buy down, meaning you are going to buy down the rate 2 points for the first year, 1 point for the next year, and then you are going to adjust back to the traditional, like whatever the rate is at that you locked in at, okay? So there are rate buy downs. There are 7-year arms in which you can lock a low rate for 7 years. And then after the 7 years, hit the computer. After the 7 years, the rate will adjust to whatever the market is at that time. So there are arms locked for a certain amount of time. There are buy downs in which you are able to take it like a tiered level. So many years you're at a lower level than the next level, and then you're back up to the regular rate. And there are different things happening there. So creative financing to make it affordable in the first couple years is nice, because if the rates do get down into the low 5s, and notice I said if, I'm not banking on it myself, then you will be able to refinance and lock that lower rate during that time. So many people are afraid that if they do an ARM or whatever the case may be, that they won't be able to refinance and lock the lower rate. My answer to you is, yeah, you can do this in many cases, and you should speak to your lender in order to ascertain whether or not that's going to work for you. You need to know all of the numbers as a buyer. You need to have everything laid out. Like, okay, if I pay this much upfront to buy down the rate, or if the builder's doing it, how much is that saving me across the span of however long it's lowered for, and so forth. So you need lots of math. Now, I'm telling you right now, I'm not doing that math for you. I am not in mortgages. I don't want to be part of that. You need to speak to your lender for that. My job is to make sure you understand there are options for you, connect you with the right people so that you can do that homework with them. That's really like going to be critical going forward. So again, if you're that buyer who keeps on waiting for that rate to magically be in the low fives or fours on its own without a buy down, you're just not serious right now. You're just not. Or you're in delusional world and it's just not happening right now. So buy where the rate is at, refinance, buy down the rate, look for builder incentives. These are the ways that the buyers are winning in this market. Now, the other thing that I want you to know, y'all, I have said this on so many of my YouTube videos. I have said this time and time again on these workshops. You, my sweet dear buyers, need to understand North Carolina real estate. You really, really need to understand that the due diligence fee amount is going to depend on the location of the house, the popularity, the condition, and so forth. So if you're going to walk into a popular house, and I really am speaking to my out-of-state buyers at the moment, because it's hardest for them to accept the due diligence is non-refundable, regardless of the inspection report or appraisal value. That due diligence fee, you can't go into a popular house that's priced at $700,000 and think a $2,000 due diligence fee is going to do it. You're competing against so many other people in many situations. Your 2000 isn't really going to even have a teeny tiny light next to any of the other due diligence fees that are going to be 5, 10K or so forth. I'm not going to tell you what to put down as a due diligence fee. We will educate you as your buyer's agent. You have to make the decision. But if as an out-of-state buyer who does not want to accept North Carolina's due diligence fee, I'm telling you, in the popular market, you're going to keep losing because you refuse to buy into what our real estate is like. That's one thing. The other thing, I'm letting you know, okay? Do not go into a purchase and think, oh, I just gave them 10K above the list price or whatever the case may be, and expect sellers in North Carolina to make any repairs or give a credit in lieu of a repair, okay? It is literally written into our contract that sellers are not obligated to make any repairs whatsoever, structural, anything. The only things that they're obligated to repair are those things which broke or got damaged during the contract time, because the contract states they must deliver the same product in the same condition or better at closing. So if the water heater stops working and it worked on the day you went under contract, yes, they're going to repair that. Same thing with HVAC and so forth. But if you go into a contract in North Carolina expecting repairs or a credit, you will have your heart broken. I'm letting you know right now, there is no obligation. It does not matter your like hopes and beliefs and what you've given and so forth. It's not the case. I can't stress it enough. So please set your expectations accordingly. Like, listen, I feel like I am a broken record telling my buyers to set their expectations accordingly. It is a curious thing that you guys just don't get that. And it sucks. I get it. I'm not happy about it, but I need you to know it. So that is what we have for today. I am really excited that I have had so many people finding me online, reading my reviews, watching my YouTube videos, and saying, Nina, I trust you. Like, I can see that you actually know what you're doing. And then in the end, when we've gone through the whole process, them saying to me, Nina, thank you. Like, they are so sincerely grateful. And that makes my heart so incredibly full, because when I moved here, I did not have a good agent whatsoever. And my promise was that I would become the agent that I wanted when I was looking for a home. So I approach everything with the utmost honesty and integrity. And to know that somebody felt that, that's my goal. I mean, I'm just so happy that I can make the process smoother for people. So if you are in the market and you're not already working with me, if you want to explore working with me, all of my contact information will be below. And I would be so honored to help you through this process of home buying in North Carolina. So until next time, when we see each other again at the workshop in April, I thank you so much for joining me today, and I look forward to seeing you then.